There are only 3 simple steps. If you follow them one by one, you will be able to get the answer. It's quite easy for us to just go ahead and calculate it. So when we talk about nominal price, that is the price at the current value, the current prices that are available. So that is what we call it as the nominal price. When it's added up to the domestic factor, automatically the national income also increases. Transfer a part of the revenue earned by the government in the form of pension, subsidies and discounts and other allowances. So transfer payment is a very, very important concept. Good morning and welcome to the second session revision in Unit 2 Business Decision Theory, where we are going to talk about the numerical problems of national income. This is the part 2. Now, when we go here, we are starting directly with a question where we are going to talk about calculate the net value added at the market price of the firm. Now the sale value is given as 400, the change in stock is given as minus 20, depreciation at 30, net indirect taxes 40, purchase of the machinery is 200, purchase of intermediate product is 250. So what we are going to calculate here, the net value added. So how are we going to do it? The value of the output that we have to find out, the sale value given is 400. Plus, we need to find the change in stock. But we all know that the change in stock value is a negative. So we will take that negative value. The final answer is 380. Now, from here, we have to go in terms of calculating the gross value added at market price. So how will you going to calculate the gross value added at market price? Now, you need to go further in terms of understanding the value of the output purchase, that is minus the purchase of the intermediate product. So 380, that is the value of the product that we have taken, minus the intermediate good, that is 250 rupees, which is given in the problem. So the final answer here is 130. Now, from the gross value, when you will be able to subtract the depreciation, you will be able to get the net value added at market price. So 130 minus 30, you will be able to get the answer as 100. So this is the net value added at market price. Very, very important for all of us. Why? Because whenever we are talking about net value added, you need to subtract the depreciation. You need to follow the step-by-step method. First, value of output. Next, gross value added. Then you have to come to the net value. There are only 3 simple steps. If you follow them one by one, you will be able to get the answer. It's quite easy for us to just go ahead and calculate it. Followed by the next one, nominal GNP is same as GNP at current price. There might be a 1-mark question what I just wanted to discuss here. Of the factor, what I'm trying to say here, whenever they ask you this question, what is a nominal GNP? Now the word nominal in economics is very, very important for us to know, because there are 2 factors. Nominal price, real price. So when we talk about nominal price, that is the price at the current value, the current prices that are available. So that is what we call it as the nominal price. When you say the real price, it's all about the market factor. So GNP at current price, the price that is prevailing for a given product, that's what we call it as the nominal GNP. So the correct answer is nominal GNP is same as GNP at the current prices. Followed by what must be added to the domestic factor income to avail national income. Now, net factor income from abroad must be added to the domestic factor in order to avail national income. Now, what is the meaning of this? Now, all of us know that there are a lot of Indians who work in abroad. Now, what happens is that the money that is being sent by them or the money that is being earned, net factor income from abroad, whatever income that comes from abroad, whatever money that is being sent, whatever factors that are coming in the form of monetary transaction must be added to the domestic factor, must be added to the value that is produced within the country in order to avail, in order to get the national income. So that is why India and China will have a greater growth in national income, because in both these countries, their nationalites are working in several other countries of the world. There's a lot of immigration that happens from India and China, where these people go ahead and settle in various other countries across the globe. So when all these people send the money back to the country, the net factor income that is earned from abroad that's coming in, when it's added up to the domestic factor, automatically the national income also increases. Followed by define real GNP. So we were speaking about nominal GNP. Now we are going to speak about the real GNP factor. What is a real GNP? Gross national product calculated at constant prices. Constant price is what we are looking. That is base year price is known as the real GNP in economics. So the base year, suppose I'm going to keep 2020 as the base year. So the price that was prevailing for a product in this particular year will be kept constant and will be compared against the other years. So that's where the real GNP comes into question. So real GNP means that when you keep the base year constant and calculate the variation of prices against the other years, then we are able to get the real GNP or the gross national product. Now, what is the example of transfer payment? Now, what is a transfer payment? First of all, very, very important for all of us to understand here. Transfer payment means that the money that is being transferred or the money that is being given from the central government to some sort of subsidies or income or pension altogether. So here, if you start looking here, old age pension. Old age pension is typically a source of income given by the government to the government employees after their retirement. So an old age pension is actually an entire kind of a burden that goes back to the government, because they have to give back to their employees till they are alive. So old age pension is like a transfer payment. They transfer a part of the revenue earned by the government in the form of pension, subsidies and discounts and other allowances. So transfer payment is a very, very important concept that all of us need to know in terms of the factors of calculation in national income. Followed by the question number 9. Now, this is going to be a very interesting question that we have to see here. What we are discussing, the net current transfers from abroad. We're going to calculate the nominal income and private income from the given data. Let's look into the example, the problem. The net current transfers from rest of the world is 10 crores. The private final consumption expenditure is 600 crores. National debt interest is 15 crores. Net exports minus 20. Current transfers from the government 5 crores. Net domestic product at factor cost accruing to the government 25. Government final consumption expenditure is 100. Net indirect tax is 30. Net domestic capital formation 70. Net factor income from abroad is 10. So we have the whole data that is being provided to us. We need to calculate the nominal and private income. Now, how do we calculate the nominal or the national income factors here? the private final consumption expenditure, government final consumption expenditure, net domestic capital formation, net exposed and the net factor income minus the net indirect tax. From the data, 600 plus 100, which is your government final expenditure, plus 70 as net domestic capital formation, net exports was already negative, plus the factors that has been taken abroad here, minus the net indirect tax. So we will get the answer as 730 crores. Now from there, the private income. Private income is nothing but net national income taken here minus net domestic product at factor cost accruing to the government plus transfer payments plus national debt interest. So 730 minus 25 plus 15 plus 15. So 730 minus, that becomes 760 altogether, minus 25. The final answer is 735 crores. All you need to do here is that look into the formula. The formula is already given in your notes, in your textbook. The formula is already there. You have to just fit in the formula, put in the data from the problem. You will be able to get the final answer. With this, I come to the end of today's session in terms of the national problem, accounting income problems. In the upcoming sessions, we shall try to come across other concepts in the business decision theory. But until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.